Hello, everybody. Excuse me. Well, news. What an appropriate topic for the current market environment, which has been plagued by news. Wow. It's sickening at this point, but as we say, it is what it is, and it's part of the current market environment. And so news comes, oh yeah, I don't know why I forget that. News is always part of the markets. Earnings news, the CFO stole all the money, um, tariffs, and so on. So while that news is what grabs our attention and the attention of others that are following on whether it's related to the broader markets or a particular stock, technically sometimes the news matches, sometimes it doesn't. Sometimes it just kind of comes across as, did anybody even care? Because prices don't move, which gets us to the point of where we're going with this because of what we trade, which is the charts. Um, so news can be a valuable piece of information, but in of itself, it could really steer you in the wrong direction if you don't know how to interpret it along with what we do on a day-to-day basis using master trader technical strategies. So let's get right into it.
All right, let's do it. Yeah, I love this subject and because I even made a comment in the green room this morning that just like we prepare for the market every day, like a professional poker player, they get dealt the cards and they have the skills and experience and risk management to interpret their hand and to know how to play it. Same with chart reading, and the same thing now with news today. So throw whatever, after today's session, we're going to teach you, throw whatever news you want at me. And we're going to teach you the proper thought process of how to interpret it and how to act on it or not, and how to make money in it and related stocks. Okay, that's the goal today. But as Marcelo just said, no setup, no trade. So the news is just something. It's an additional filter to bring us to our technical approach. I get news ideas from our top-down analysis, from driving by a Walmart. I'll just pull up Walmart from the news. So your friend says, "Hey, take a look at this." We get to reading Barron's. We get trade ideas left and right. But this is our filter that we put any idea that we get. So we're price based. I need a setup. I need a compelling pattern on the time frame that we're trading. And then Greg's full course, these are all individual thought building lessons that he puts them together. Where is this pattern in the trend? Is it on support or resistance? What are multiple time frames in alignment? Is it showing relative strength or weakness? Sure, we look at volume and moving averages. They're secondary. They can help and speed up the analysis is all, but we don't need them. What are the broader markets doing on a day-to-day trade and swing trading basis? Obviously, money management, trader psychology, having the discipline and patience to follow your rules, and that's what trading's about. We're not the manager at Nordstrom buying and selling clothing inventory. We're buying and selling these financial instruments to make money. That's what we do. That's our inventory. Let's grab this from FinViz. I mean, news is just constant. I mean, look at this. This is every couple of minutes they're posting something, and obviously not going to go through this, but well, here let's go to. Well, there's another page that I'll show you. What are you supposed to think? US stock markets rise on Trump tariff rollback. Okay. Uh, let's just go into it. So start with the basics. Let's start over here. Well, first of all, let's start with a definition. This is a candlestick, any time frame, any instrument. It's showing the opening price, it's showing the closing price. This is called the real body. If it's green, that means the close of that bar is greater than the open. And then it marks off with these wicks, the high and the low. So that's just a visual display, which is different than a bar chart or line chart, of showing me how this bar was made up with the market participants. So we say the bulls won because it closed above the open. Last MT Live, we talked about power bars. So this looks like a big power bar. This, another big power bar, but it opened up here and sold here. So the sellers were in full control of this bar. So let's read this. What has to happen for a stock or ETF to move 1 penny up or down? Just what has to happen?
Somebody has to sell it at a lower price than it was a penny ago.
Right. So visualize. I should have put a picture of a level 1 up here. Level 1 shows the volume at the bid and the offer. Okay, so it's bouncing bid and offer, and the stock's going sideways. In order for it to move up, that means the demand has to eat through the available supply at that price. So demand is greater than supply and it moves up. So you'll see why I'm starting with this slide. So now I added this question. What truly moves stocks? I just said it. An imbalance of supply and demand, okay? So you gotta start with that understanding. Now, news is going to affect through fear and greed supply, sellers, demand, buyers. So are you seeing the connection now? So we say that, oh, stocks went up on XYZ news. That's what the news job is. They got typists there filling out the lower thirds on the financial networks. Oh, NVIDIA is up today on blank, on blowout earnings, tariff relief, new CEO, whatever the case. But the true reason it's up is because demand was greater than supply. Now that happens. Now it's back to this bullet. That's happening because all buyers and sellers is reflecting the true collective belief of all market participants. So demand was greater than supply. Was it on news? Yeah, if that created more demand, but it also could be for macro reasons, for any reasons. It's the collective beliefs of all participants is making that go higher. Okay. This, when I worked with Greg 25 years ago at his other company, we made these CDs. And so I made one on trading company news. I studied all these event studies, which is, okay, this company announced XYZ news. Stock went up 3.3%. Let's study 100 of those and see if we can statistically determine what should happen on a news event. So, it cracks me up that, you'll see it every time, particularly with earnings. There was one yesterday on J&J. They blow out earnings and the media will say, oh, J&J is up on good earnings. But guess what? J&J gapped down yesterday, so the media doesn't know what to say. So their headline was, J&J is down today despite blowout earnings. They don't understand this subject today. They just mask it with some explanation, but it's the collective participants which caused J&J to gap down. For those of you like Greg and me who traded in the internet 90s, the crazy internet.com, stocks were going up on bad news with zero PE, just crazy, because it's people's perceptions to the news that's important. So that again, we're slowly giving you some foundational things that do not look at a piece of news, CNBC saying, "Oh, look at this great news," and you just buy it blindly, because price is king. So one of our statements is a stock that does not act bullish on bullish news is bearish.
Dan, I would add one. You're reminding me of back in the late 90s and how we have these generalities about news and what we're talking about here. But in addition, market environments change, meaning if a company back in the 90s, believe it or not, if they reported they made money, the stock went down. And the thinking at the time was, if you're not spending every dime you have and borrowing as much money as you can borrow and spending that to obtain eyeballs, you're not doing what you need to do for
So
this
to grow,
internet craze at the time.
right?
Yeah. And like now, oh, you're not making money? Kill it, kill it. You didn't beat expectations? Kill it, kill it, kill it. So these kind of things change. And in addition, because market environments do change and our perceptions of what's good and bad tend not to change, but we have to go with the flow because of those changes. So what I would say add to that is, like right now, when we'll look at some current charts, is like, what was the news of today? Oh, some negative stuff about NVIDIA. And of course the stock gaps, it did gap down,
Mm-hmm.
but it's not continuing to go down. So, as we get into the technical parts of it, it's like, why isn't it going down? Well,
Yeah.
there must be some technical reason, but um, so these news events bring our attention to things, but we have to recognize that things change over time as far as the market's perceptions to certain things. And there are things that generally hold true over time, but um, we have to bring ourselves back to what this says right here, right?
Yep. I don't see your cursor, but yeah, perfect. Right.
Price is
So
king.
it's the reason for us to look at the chart. We're going to show you when to trade with the news and against it. And then, on every chart you look at with the news, ask yourself this: how should the stock react using common sense and, my event studies, but just stick with common sense and see if the chart is reacting that way. Then you say, who's going to benefit from this news in terms of in the sector and what stocks? Who's going to be harmed? So not only can you trade with the good news, you can say, well, this contract for NVIDIA is going to hurt this one, or Boeing. I have an example here in a moment. The reason I have this beeper up here, because I started trading full time in '97, and I had this Wade Cook beeper, which he beeped you the news, and I got busted with this. So that's why I took a particular interest of wanting to read it, because not everyone I pulled up, if it was good news, it was extended. So timing is important. And then sometimes, obviously, I would say, well, he told me that stock splits are good news and this stock's tanking right now. Why is that? I'm not going to get into these, just read some of these yourself. So what are your, just read it. What are your thoughts? And then I would go to the chart. to make a determination, just like the last slide said. So let's look at some charts. We're in the middle of any of this tariff stuff. So this is a great example. Anything igniting fear or greed will move stocks. Back to my supply and demand chart we just started with, right? Even if it's false.
That happened last week.
That's what this is. The false Trump tariff
Uh,
move 2.4. This move, folks, from here to back down. They did the math, I didn't. But this false rumor swung the market $2.4 trillion of value. Trade the charts. This Trump victory. So this is a weekly chart of solar. Everybody knows Biden, was the green news scam, EV cram down your throat president. It was already weakening for many weeks and months, but now Trump victory. Look at this. So we're chart readers now. So Greg, what are we supposed to think now with this weekly breakdown following the Trump victory?
Continuation of the past.
So that's an igniting, nasty breakdown sell setup. So we look for bearish setups. This was a trade we gave to our subscribers as a continuation breakdown. And remember, on every chart, who's going to benefit, who's going to get hurt. So with Trump, so you ask yourself during the presidential election, and this is smart thinking, actually. Okay, if Biden wins, what stocks are going to benefit and get hurt? If Trump wins, what sectors and stocks are going to benefit and get hurt? And you can start to create some themes to get ready for whoever wins the election, and then go to the charts and look for trading opportunities.
Marked off those bars to reinforce, what was happening there. So, the charts representing to us what other people are doing. Every time it went up, there were sellers lurking up above and knocked it back down again. So as we look at this, what we call bar by bar analysis, it's confirming the trend. You can see that, the moving averages, the 20 is just pointing down like that. So at times we think, hey, this thing's down a lot. Maybe, and you see, before this is complete, you see a green bar and you might act on that, but don't. You wait for, trends to reverse and bottom out or whatever. Some kind of bar like that, flip it upside down could be a start, but just recognizing what is happening there is a huge plus to keeping you objective about what's really happening. So that's why I put the question marks to raise the question. There's like for you to think what's going on.
This was 2 days ago. Great news for Apple, semis, and computers. Actually, it happened over the weekend, but 2 days ago was the Monday gap. Trump is going to exempt some tariffs on these things. Okay, so why is that good news? Why is my common sense bias that these stocks are going to gap up? Well, it's common sense. Less tariffs, less cost, more net income, more buyers. I mean, that's kind of an easy one. So we have them on our watch list Monday morning as gappers. So, we got sloppy patterns everywhere. That's what we're in right now. So it gapped up, in the middle, it's in a downtrend. You can see that it sells off immediately. This one, even weaker, it couldn't get over this prior high. The SMH is the semis. So look, I put this in here. Great news, but where's the trade? What do you want me to do with this? So I wrote this note. Okay, there are no setups here, but maybe scan the cousins, the other stocks and ETFs. And we just go looking for a setup. um, to trade with or against. If I have a bearish setup and everything's sell the news, then I got no problem shorting something on this good news, provided the pattern is there. This is today or last night, rather. Bad news for NVIDIA and the semis. So let's see. Here's the news. AMD, Micron, Broadcom stocks drop. US tightens chip export rules. So I think I read NVIDIA said they're taking a $5.5 billion write-off because our government is saying you can't sell to China. We're in this trade war thing. And I'll show you Boeing in a second, where China just did the same thing to Boeing. Just tanked. This is after the market last night. So let's, it opened up at 105. Right now it's at 103.70. And we were actually considering in the green room today, because of these bearish gaps and these downtrends, of shorting bear call credit spreads, which is, so we got a bearish gap down within this trading range. And day trading shorts, you can find stuff all the time in the green room as we do. But it was such a big gap down. I was looking to sell credit spreads, which is sell a call over resistance, buy a further out of the money call, take in the net credit, and it's one of our income trades. I just couldn't find sufficient premium, but that was the thought process on this news. It's bearish gap. Now I'm looking for patterns to trade. This was yesterday. Boeing shares tumble after China suspends aircraft deliveries. China came out and said, you Chinese airlines, I'm not letting you buy from Boeing anymore. Common sense. How should that stock react? Should gap down. You're eliminating a huge market of my customers. Okay, it gapped down. SP. And so this is where I'm looking for, I'd say remember my question, who's going to benefit, who's going to get hurt? So they're getting hurt. Let's see who else is going to get hurt. Wouldn't suppliers be a normal thought of they're going to get hurt too if Boeing's getting hurt? If they're selling less, I'm going to be selling less parts to you. Spirit Aerosystems is SPR. Collins, I couldn't put them all here. Honeywell, General Electric, they supply the engines. Here's GE, gap down. Check the charts and competitors. Where's my setups here? Now, GE, though, I haven't looked at it today, but if it were to close like this and I have a price void above and it took out the high, this would be fading the bad news because the chart doesn't care about the bad news. Now, why is GE acting bullish on this bearish news? Well, number one is, I don't know. Number two is, well, there has to be other good news that the collective market participants are saying that this bad news is not going to affect them. Are you starting to see the thought process of this? But I had no setup to short Boeing. There's no pattern here to short, other than maybe another call spread. This one was a week or so ago. Healthcare insurance stocks soar after boost of Medicare. So the Trump administration came out here and said, I'm going to pay you all, more money on this, Medicare reimbursement. So here's UNH above the 20, above the 50, and it's gapping way the heck up here. Problem is the gap's too big, and I don't know what to do with that one either. Sold off, then at 180, so I might be now looking for some put spreads. CVS, big gap, multi-month breakout above the 20, 50, and 200. and a bunch of inside days. This one is still on our long watch list, but it hasn't triggered yet.
That's often what happens with these excessive gaps is that one of the pitfalls is as humans, we want what we want when we want it. And so when we hear these news items and it brings our attention to that, of course, I want to make money now. So depending on the pattern and what's creating the gap, we may or may not. And generally, if the gaps are, I don't know how to define excessive, but just visually looking at it, when they tend to gap up excessively on earnings, they go through kind of a quiet period. But it's been my experience that usually, especially in a bull market, within a couple of weeks, they have a higher tendency to go higher.
Yeah, yeah. So yeah, CDS is a much better new pattern. DuPont 2 days ago, I I think it had good news. I forget what it was, an upgrade or something or other. But there's no directional pattern. I have no interest. It's gapping up to this bar, but it's a beautiful support under here. So we recommended selling a put under this green bar as well. We taken 75 cents a share, 3 days of risk. Oh, I wrote it here, upgrade. It's a bullish gap breakout and an upgrade after a climactic buy setup and 6-bar turn. So this is Telegram. This is how we give new trades to our subscribers throughout the week. And we give them the stock, the date, the stock or option trade, technical setup, and management. So that's how we looked. The news brought us to the chart, and we delivered a trade out of it.
What I'm circling there, if you're not familiar, if you're not a subscriber, you may not be familiar, but this gives those subscribers enter the trade above this price. This is what you're going to do. Short this credit spread expiring 417, right? This week.
Yes.
So there's your price. Bull put credit spread. And bull put, bullish, put, bullish, with bearish put meaning bearish, but you're bullish, right? Kind of whatever it is, kind of backwards anyway. Like with the call spread that Dan mentioned, with the put spread, you're just selling a more expensive one and buying a less expensive one. And the difference is what they put into your account and you get to keep if on expiration, right? Short-term expiration, it's still above here.
Like short strike. Yeah.
It's the most simple thing, but you have to know, the little nuances, of course, about how to place the trade and how to find the trades. And so even when we find patterns, many times there may not be premium there to do the trade, but when you do, you know, the whole other mechanics of it, what you're doing is simple to understand. And then so the shorter the time to expiration, right? That's great because it doesn't take, and you don't have to hold them until expiration. Sometimes prices, they move a little more rapidly, and you can take 50% or more, before the expiration.
Cody here 2 days ago, just a vanilla downgrade. Fine. It's in a downtrend, gap down. It's not a good directional short because of the support. But if there was premium, you could short a bear call credit spread and also a day trade short. And when I look at the news like this pre-market, I'm obviously filtering out a bunch because I can most of the time see the gap pre-market and I can say, oh, this looks like it's going to be something of interest, or I just move on because but this is part of our pre-market prep. This one was earnings yesterday. Now this one is an igniting gap breakdown on volume after earnings. Look at that volume. Look at this is gapping under one, two, three, four, 5 bars in a downtrend. Notice the very small tail. That means it couldn't bounce. So depending, this would be a gap trade for us, trading with the bad news. Now, so the two things, do I fundamentally care about what their earnings are? Nope. What if I saw this pattern and they said blowout earnings? Would I trade it the same? You better believe it. Because the chart's telling me it's an igniting gap breakdown, short 5-minute low. I use this term cousins to say, hey, I see one problem on a Home Depot, on an Uber, or a Coke, go see who their cousins are. So Uber, Lyft, that's what I mean. Cousins is just my analogy. So if this one's tanking, APLD, I don't know who their cousins are, data center specialists, I'd go see if I have some short opportunities in those setups. That's all. It's that simple. I mean, this is a great new product we came out with a couple of years ago. It's we call it the Master Trader Weekly Advantage. You get ongoing education. There's certain weekly ones. Greg and I do just impromptu. We do lessons all the time. You get the replays of all of these MT lives. Less than $10 a month. It's an amazing deal with the amount of education you get in there.
Less than $10 a week.
A week, right. This happened yesterday. Another trade we found. Old Zuck here on the hot seat. Congress being drilled over antitrust concerns. Now, I say good or bad. Let me table that for a moment. Because, the obvious is you do not want the government coming after you, period. The IRS, the FTC, in any organization. Congress, why? Well, disruption of business, and it's going to cost me a lot of attorney's fees. So the obvious one is it's bad news. Here's the daily chart on Meta. Big mess, but it's a bearish turn in a downtrend. Okay. It's a daily chart. When we were, I have 6 screens here, so I'm always monitoring the FANG stocks, just right in front of my eyes. And this is the one we were talking in the green room as a day trade short, right here. So we had it broke down and then came snapping right back. So we're like, all right, let's see what happens after the doldrums. Look, you got what, 10 inside bars there? This green bar was a small closing breakout, followed by this. That's what we call a 180 breakdown at the 20 MA on the 15-minute chart. Short under that red bar, stop over the green bar, manage in between. Look at that beautiful short we got. Now, I don't know what Zuck was saying at the time, but that's the reason that was the best looking FANG stock to short. Oh, the reason I say it could also be good news sometimes when the government's coming after to break up companies, there could be a fundamental reason to say, you know what, even if they do, the fundamental people saying the sum of the parts is worth more than the whole. So the stock actually goes up and it doesn't fall like this. This was yesterday or 2 days ago. Rocket Lab selected to provide, 2 days ago, hypersonic test launch capability through development programs. So what's the news there? New contracts. What's the pattern? 3 bullish inside bars from this wide range breakout, red bar ignored. Yeah, 450. Well, this is yesterday, was 415. So we bought the stock. The technical reason, red bar ignored breakout of 3 inside bars. after this wide range breakout. Sold a third for a quick $1.50 gain in 20 minutes. But it was on our pre-market watch list because of a bullish pattern. It was gapping up a little bit, and we monitor it in the morning. Sterl, what's the news here? Stocks being added to an index. Now, it creates additional demand, like by definition. And what I mean by that is stocks that are in the queue, spiders, Russell 2000, et cetera, an index ETF. The funds that mirror those, well, guess what? They're required to go out and buy the stock if they're going to mirror that ETF now. So they do gap up being added, but you have to see if there's a pattern. And so this one didn't, have a great pattern, but I say watch a pullback. Could set up in the next few days. And then companies that get kicked out, you cannot look at for bearish setups. And I did look at Pidco, but it was a buyout a while ago. So that those don't count. It's more so the ones that get kicked out because their dogs are the ones that are going to get hurt more. Not a lot to say about this. This is just IPOs. So it's not a specific news event other than the IPO. So this is the only comment I'm making. They can be wild. Okay. So look at this IMAX or NMAX rather. And this was just 2 weeks ago.
It was insane.
735%. I mean, what idiots would buy up here? But there's still no pattern on the daily. This is a 15-minute Webull, just came out 2 days ago. So, as a general rule, unless you're really experienced, even on IPOs, I would like them to trade for 3-4 days. It's just me before trading intraday, just because you have more data of its behavior. So that's all. Not a lot to say about that. You've heard me mention Green Room about 5, 6, 8 times already. This is an amazing place where we walk the talk in real time. So we prepare, we look at gaps. Greg starts with his market and sector and techno fundamental analysis to give us a bias for day and swing trading. I look at opens, gappers, these news trades, looking for anything of opportunity to trade that day. We're scanning, we're answering questions, we're trading together. And so Greg just posted you a link there. Check it out. We could spend, that's why I did this DVD 20 years ago. We could spend hours on this, but it does not matter the news that you throw at me. Intel's had all kinds of crazy news over the last couple months. I don't have it on here because it doesn't go back far enough. But I remember when Biden was feeding them $8 billion, the stock did go up, but gave it all back. I don't know what this news is, but I say check whenever you see a big bar, there's 99% certainty that there's some news there. But this to us, regardless of the news, would be what we call a wide range ending bar because it exploded from here to here. The next day it gapped down. We would be looking to sell these out of the money bear call credit spreads. This, a new CEO was appointed, big gap to resistance. There's nothing to do there. We were hoping that it would give us a controlled pullback, maybe to the 50. Obviously, it didn't happen, went up, turned into a mess like many other semis. But as a general rule, a change in top management is typically bullish. See if you can find a bullish setup.
Davos, breakouts can jiggle after they initially move up. It's not uncommon because if it breaks out and it breaks out with a wide range bar, it's had a big move initially, and you might get a 1, 2, 3. Might it, so it can jiggle a little bit. It doesn't have to just take off. And it depends on how long the base is. Sometimes things are basing long enough to where traders become impatient and they're like, I'm just glad to be out of this thing. And that can cause a jiggle. So, we have general concepts, right? Broad concepts. And then as they come together, to looking at, a bigger picture, so to speak, market environment, sector, relative strength, relative weakness, so on and so forth. Um, was there a shakeout? All of those things can add to the probability of the setup working or not, whether it could just take off or whether it, as you're saying, jiggle around, triggers will jiggle a little around a little bit. So you can't just say something in a black and white context when it comes to the markets, because there's always could be some variable out there, market environment, news, you know.
This one was just a vanilla breakout on earnings, multi-month consolidation after this explosion. So it calmed down and got tighter. 20 MA flattened out. I have a rising 50. Gap breakout. Pulled in, recovered, we bought it, easy to manage. Look at that. We made 50% return just in a simple trail.
Let me add to something with this, is that comment. We all have not a tendency, an outright fault in our thinking to a certain extent to want thing when it comes to trading. Normally it's not a fault because that's everything else functions in that manner. That we want things to set up in a way like that's it, that's the trade. I place the trade and it starts printing money for me, so to speak, like no jiggles, as you're saying. Well, so when you get a wide range bar breaking out, now here's your dilemma in a sense. Well, I'd like to have a 1, 2, 3 because that increases my odds of not getting jiggled. Well, and if I got a 1, 2, 3, 4 that had that correction bar, well, that's what I refer to as a money bar. And well, if I can get a money bar, that would be amazing. Well, guess what, Greg? The market ain't necessarily going to give you what you want.
Mm.
So what is your alternative? Well, at a minimum, what we do with every trade is, well, it's got to trade above a prior bar's high. Okay. Well, I don't have a 1, 2, 3. I don't have a 1, 2, 3, 4. Whatever. Money management. This is where share sizing allows you to do things and say, well, I'm going to share size under the wide range bar and I'm not going to go all in. So it gets deeper, and that's part of the money management course.
This is one we faded. This was a bearish gap down on earnings. So what am I thinking? I don't care about the number was, it's a bearish gap. And it looks like it's going to be a continuation breakdown. Couldn't even take out a 5-minute low and exploded higher. So I don't care about the reasons why. I just know that whatever caused it to gap down got negated. Then we had an inside bar, price void, target up here at this prior high, bought the stock. Another gap down. So these were, we did, the trade review just came out this morning and it was on this chart right here. We did 4 credit spreads on the spiders in 2 days. So even with all this crazy moving around, these are great credit spread ideas. We've already given you a couple of examples of those. So this will hopefully solidify it even more. So we had this crazy big move this day when Trump said, "Oh, I'm going to pause all 90 days." The tariff talk, and then it gapped down. So here's this explosion day on a 15-minute chart. Here's my gap down. With these explosion bars, it leaves a void. There's no support. So when this thing went sideways, broke down, then a small little sell set up and had another closing breakdown, we sold a 0 days to expiration out of the money credit spread, took in 73 cents. If you did a 10 lot, $730 is deposited into your brokerage account. We actually closed it here at the low for a few pennies. And then we switched and put on a 0 DTE naked puts. Now, Greg, I don't know. Yeah, I don't know if you were there at the time. So let's just call it $515. So we went down 40, $50 lower, 25, no, $40 lower. And it's 1,300. There's only 3 hours left of the day. And the volatility was so high. We got 75 cents a share for $40 lower. It's like insane. When the volatility is high, we go wild on these. Went up, had a nice little retest. We sold more puts that expired the next day. The next day, we had this closing breakout of this consolidation. We sold 6 days away naked puts, which we actually closed the following day for 20 cents.
I would
Very
add
next
to
day.
that the the, um, the spider options typically do not offer that kind of premium
Mm-hmm.
with that time to expiration. So what does that mean? What does that mean to us when we see that? Well, it means that it's close to a no-brainer opportunity when they're that far away. However, what it communicates emphatically is that there's a tremendous amount of fear and confidence that the market is going to go down and go down in a big way. Odds are it's not going to do it in the moment, especially with options that are going to expire 0 DTE. I mean, it's so insane when you think, well, why would anybody in their right mind buy a put option so far away that's going to expire today? Well, they're convinced without a shadow of a doubt that it's going to go down. And you got a lot of people doing it, and there has to be a lot of people for the market maker to raise the premium to that extent. So when you see that, you can do the trade, of course, but it's a contrarian piece of information that when something typically doesn't happen, and now all of a sudden the majorities believe that paying this kind of money for that kind of protection or to make a profit, it's a contrarian indicator.
Yep. All right. Yeah, we're done here, Greg. We can, you can just read this and Greg will pull up his charts. We can look at some news items today, but yeah, this came from one of our subscribers to on selling these options. And the beautiful thing many times is you make money even though the stock went against you, because remember, we're selling out of the money puts and calls around support and resistance. So stock can go against you and you still make money. And this was an email he sent us with this picture, so I thought that was funny. And this was Facebook a while back, Meta, when the FTC was coming after them. We had a beautiful double bottom, so we faded that news after an extreme. And that's it. So yeah, let's look at some real charts. That Nvidia is at the low now, Greg, 15.
I see it. I see it broke down.
Yeah.
Um, yeah, link for the uh, thing here. I was going to put the link for the swing course. Got this blog thing here. Education.
Now, here's one I'll type out that I did today. I gave subscribers. Look at Hertz plus gap breakout. We sold the 3.5 puts for 10 cents a share. Now you may say, oh, that's not a lot. Well, I sold 30 of them. So the $300 hit my account. And so, yeah, Greg, let's look at Hertz because it's a great example of what are the odds this thing is going to $3.50 by next week. Let me see where it's trading now.
Which one, Don? Dan?
Uh,
Which stock?
Hertz, the news on that was, and I couldn't obviously cover all news things today, but the news that brought us to this chart today was one of these big um, hedge fund types announced that they took a stake in it. It's similar to what Buffett does when he says, "Oh, I've been accumulating shares over the last 3 months." So it's late information, but it's a great example of the first slide. Is the news going to generate, fear or greed, demand or supply? And if an activist fund is building a stake in this, that's going 95 out of 100 times is going to bring in demand. So this was a bullish gap breakout from a multi-month bottoming pattern, and we sold out of the money puts.
Kim, with new text alerts come with either any of the letters that we offer, advisory, swing, or the ETF. I'll take a look. Let me just answer this one question. With a small account, would you recommend futures or options? Normally, I would say futures. However, the ranges have expanded so wide that even trading the minis to trade one contract, if depending on how small the account is, your potential risk under a 5-minute bars low can be substantial. So I think you know they all have their risks and nuances, of course. But yeah, I mean, with futures, with a very small account, you could open up an account with almost any broker with $1,000, and they're going to allow you to trade, multiple contracts probably intraday. So that's attractive. Um, so I mean, with options, I mean, the day trader rule applies to that, doesn't it, Dan?
No, not with futures. I don't. You don't know.
No, the pattern day trader rule relates to option trading as well, doesn't
Oh
it?
yeah, yeah, yeah. Options, yes, not to
Yeah.
futures.
So look, you got a minimum of $25,000. So um, I don't know what you're referring to as a small account, but okay. So this obviously was a gap up, I guess, on whatever the news Dan was mentioning. And when I see something like this, I want to condense it. And now it looks much more attractive to me because all that whippy stuff has now been condensed, and you can see how this has been bottoming out now for almost a year. Oh, maybe it's ready to break out, and today's gap up today on whatever that news was could be a start of that, especially with the volume that was there.
Yeah, yeah. We just
Yeah,
sold the 3.5 puts. It's not a directional to me yet, but yeah.
yeah.
All right.
Uh, there's
Yeah.
the Nvidia, but no, things it gapped down, and this is, you got to be careful with these news things that attract you to something it was clearly bearish news, but the size of the gap was significant. I mean, gapping down here, that that's almost 7% gap down. The odds of everybody just piling in to it. And this is the idea or the concept here of creating resistance. So it's just not a great opportunity when the gap is so large like that. Um, but now at least it's broken down to new lows and maybe it'll continue to creep lower. What else, Dan? There might be news today. So
Uh,
these are active stocks that are in this minder, the typical suspects.
yeah, I'll just pull up current news right now and see.
This I mean, it's been bottoming out here, and it might be just because of the market. We were looking for Tesla, which has obviously been in the news, Musk, Dodge, so on and so forth, being attacked, Teslas being, vandalized and all of that. And, it looked like it was going to try and start to move higher. Now it hasn't really broken down, but um, there's just nothing really to do. I mean, day trades certainly could always do day trades, and now that it's broken down, yeah. Brown, I made someone, you can't see it, Dan. Someone posted in YouTube, the Brownie 1214 asked me a question, and I made a little short video and posted it on, and the response on YouTube. Oh, this is another one that we've been hoping would break out, and now things are deteriorating. I know this has been in the news. I don't remember what the news was, but it was shaping up here. And this is probably the 7th. You see April 7th. That was on news where everything was lower. And there was like, oh, the tariffs, we're going to have a 90-day. I think that was the 90-day reprieve thing. And so now it's at resistance. Thought maybe something could get going. I have an alert at the top of this bar to see if it'll do something. Um, Apple, so many things are just going nowhere. It's almost just like, why bother? I mean, even intraday, they're whipping around. And look at what happened here today. So we talked about wide range bars. So, here's the broader markets that we look at every day to assess what's going on there in different sectors. And so this was the 7th, as you can see, the big reversal day, and everything's just trading within that range. Now, the uncertainty in the market right now because of news or the potential for news, right? What is Trump going to say today? You
Right.
know, right? What might he backpedal on that'll rip the market higher, or how he may reinforce, you know, against the backpedaling that'll drive it back down. So look at what happened here a little while ago. So markets were doing nothing, nothing, nothing. Wide range bar up. I was like, okay, maybe it can go up and fill the gap. And it gave it all back. And it's just so this to me is like the algos. I don't think there was any news that pushed that. I just think it was kind of one of those situations where traders thought the market would go lower because of the negative news and it didn't. So they run the stops and now it comes all the way back down again. And just a lot of indecision. And so price is king. Price is king. And so we see, a lot of indecision right now and being able to recognize that while you're not going to make a lot of money, you're not going to be losing money. And, we'll
But
see what
our
happens
credits,
tomorrow.
our credit spreads are 22 for 23 in the last two.
Yeah. And so, because I'm primarily a directional focused trader, I kind of feel like the redheaded stepchild looking out like in through the window through Christmas into the Christmas party, where here are these credit spreads, and a lot of them have been we've looked at haven't had a premium, but some of the others that they haven't down saying whatever 22 out of 22, and you know that's working. And we've been through this before, where credit spreads were kind of one of the only games in town other than intraday. But even the way things are trading here now, intraday is no you know easy path. You can see in these intraday breakout failures and breakdown failures. So we'll see what tomorrow brings. I hope you found this MT Live helpful, as all of them. Consider weekly advantage. And so the past MT Lives, when you register for that, I think there's now probably at least half a dozen or more in there. So there you automatically get the older ones that you can then go ahead and watch and repeat, and reviews of the trades and so on and so forth. So all the best. We'll be back next Wednesday. We'll talk then. Bye bye.